Millennials are in for a rude awakening. What more can I say about that? It's like they're being led to the slaughterhouse, but on the way they're getting, tea cakes and cuddles. It's absolutely crazy. What's going on, traders? Welcome to LWT Trading. If you haven't done so already, please do hit that subscribe button, turn on the bell and flick the like button just like so. Now that everything is out the way that YouTube make me say, they don't really make me say it, I just like to feel oppressed sometimes. We can get on with this subject. Now the subject for this video, as you probably guessed, is we are all going to die. Start burning things. Well, no, don't start burning things. We've done that the past couple of months. Crazy, I know. But the world is going to crash. Stock market crash incoming. There is 100 videos like this on the internet. Even I have done one before and then I changed my mind and I said I'll never do it again. But here I am. And I think it is a very worthwhile video to watch. So please do stick around before the end of the video, before you drop a comment below. And the stock market's not gonna crash. It will crash. Betting you money it will crash. Let's bet Bitcoin because that might be the safe haven. But before we get into why the market's gonna crash, we need to see why the market is high. And quite frankly, we had this big drop coming off COVID and the market has rallied 40+% currently at the recording of this video and created this V shape. If you watch Da Vinci Code, this isn't like, a cult or anything, but this little V shape, and everybody's been talking about the V, the W, the X, Y, Z, A to the B to the C to the D. I'm not rapping ever again in these videos, but you get my drift. This V-shaped recovery, whatever you want to call it, stocks, recessions tend to have an elevator down and then stairs up, and this has sort of had the elevator back up. It's crazy. Why? Well, I think it's down to new investors, and the reason for that is we know famously Warren Buffett is currently sat in a biggest cash reserve he's ever had. There's many other billionaires selling stocks, people are sort of sat in cash, and we haven't seen the increase in gold or the Japanese yen that much, which tends to say that investors are not really going to the safe havens yet. They're just sat in cash seeing how this will play out, which is mental. Warren Buffett's been criticized for not taking advantage of this 40% rip up. Let's call it a rip up or a parabolic move, whatever the millennials are calling it these days. But it is crazy that people are genuinely giving Warren Buffett a bit of a hard time for not investing in this rip or parabolic move. Quite frankly, Warren Buffett is one of the most intelligent investors in history and will live on to do so. I think he's not seen any value, and I see this similarly. Maybe not for the same reasons, but definitely for valid reasons. Now, if you don't know much about me, I am a day trader. I do have some long-term investments, some dividends. We're going to come to that in future videos. But as far as new investors goes, we've had record numbers of new accounts being open, and the majority of them are from millennials. Now, I believe, as many do, that majority of these investors from this generation, Generation Z or millennials or whatever you want to call it, are coming to the market because they're getting stimulus checks. They're getting money, sat at home bored. Netflix is quite cheap still, not the stock, the subscription. They're sat at home, they're getting this money and they want it to work for them. There's only so much shit you can buy on Amazon. Can I say shit? Well, I just did. Anyway, but you get my drift. There's a lot of people sat at home, want their money to work for them. They buy a course for 10 grand that they found on the internet and they want to become the next day trader. But there is also people who are investing long term. There's record numbers in pension investments, savings, lump sum investments, stock market openings, transactions, and the list, quite frankly, goes on, and we can see that in a chart later on. Now, you're probably sat there thinking, of course there's going to be an increase in numbers. People are sat at home, they want to open brokerage accounts, they might open one for their spouse, their children. That's normal. Things tend to grow upwards, but no. E-Trade in 2020 April recorded more than 3 times as many new brokerage accounts opened as they did in April 2019. That is a phenomenal increase. Funnily enough, it was around the time stimulus checks happened. Coincidence? Maybe. Let's have a look at some other stuff. But before we get onto the other stuff, also this figure is a paramount against most brokers. Interactive Brokers had a massive increase. TradeZero's had a massive increase. Majority of companies have had this huge increase, and the only thing people can think of is it's stimulus checks People are sat at home and they want their money to work for them. Now again, you might think that majority of people don't open that many accounts anyway. TD Armatrader opened 400,000 accounts in March 2020. Now that is nuts. 400,000 new accounts, each with $1,000. I don't know what their minimums is, but like crazy. Now on that, yes, they're all opening relatively small accounts in comparison to your Warren Buffetts of the world and your Tim Sykes. I can't believe I just compared Tim Sykes. But you're probably sat there thinking, it's only small volume. Warren Buffett, one trade can be more than them 400,000. You're exactly right, but we know Warren Buffett and co are sat on the sidelines. A lot of investors, big sizes, are sat in cash and not doing transactions. And that's a worry, because if we go over to the charts, so here at the charts, we can see we're more interested on the volume on the bottom. We can see that the volume has slightly increased. The average trades in Amazon before February, let's say, were around about 3 million shares per day. And then now it's actually nearly 5-6 million shares per day. That's daily volume. That's not long-term investing. That's majority of day traders, which is bonkers. And it's not just with them. We can also look at Tesla, which is looking a bit like Bitcoin, which is crazy to say. Tesla, on the other hand, around about January time, was trading 7 million, and now it's trading 20 million. That's just bonkers. The list goes on. Apple, again, big increase. February, January, December, 27 million, currently 45 million. And this is apparent against all tech companies especially. But look, Facebook, January, February, 15 million shares average volume, now nearly double. This is absolutely crazy. So this is really scary for a value investor, a pension planner, someone who's looking to build their 401k. And I don't blame you for sitting on the sidelines. If we just look at the SPY, the S&P ETF I tend to look at, again, we can see this mega volume increase even after the sell-off, and the volume has continued in this rapid sort of, parabolic move we've had. It is benignly phenomenal, and I cannot understand. Now, some people are going to go back, you're only looking at a recent chart, because yes, if you go back to 2016, the volume was pretty similar. But as markets tend to get overextended, people tend to sit in cash a lot more and take less trades. So this is sort of a day trader's dream. A lot of people are day trading right now, and I think they're in for a rude awakening. And I think that this millennial generation, or whoever is buying, brokerage accounts and stocks with their stimulus checks, I think they're all gonna get led to the slaughterhouse and, given a cookie and off with the head. Might get demonetized for saying that. But that's my theory on the volume and the chart. If we take into account the volume we've just seen, and obviously the Fed trying to prop the stock market up, and the Fed is actively trying to keep the market going during this COVID crisis, during the China crisis. And I think sort of you have to say hats off to the Fed a little bit, even though they're getting a lot of stick right now. But I think you have to say hats off. They don't want 2008 to repeat. They've learned from their mistakes, and they're trying to prop the market as hard as they can. And this is why you've seen the recovery. Throw in stimulus checks, people sat at home, bought out their faces, and they just want to buy Tesla stock, which is crazy because you could buy a few Tesla stocks and actually buy a Tesla instead. Mental ticker. We're going to talk about Tesla in a future video. But I do think that these new traders, millennials, Generation Z, are really helping to keep the market alive. And there's a lot of good day trading opportunities. But the problem is majority of traders lose money because they don't cut losing trades. And I think that is going to really cause a massive panic. And I think it could be a massive recession that we've never seen before. I don't think the market's going to disappear, no. Do I think it's going to be as bad as 2008? Probably not. The recovery will be much quicker when the economy gets rolling. But, fear does drive the market, especially in times like this. It is unprecedented fear. And fear drives the market more than optimistic opportunity. So what will happen in the future? I've wrote down some notes. The world will end by... No, that's a different notebook. Sorry. We have over 1 million people per week, let that sink in, per week, filing for unemployment over the last few weeks. That is crazy. We've gone from a very low unemployment rate in the US to a very high unemployment like that. and there's no sign of recovery. It's not like, car factories closed down in Michigan and there's another, one opening in California or something like that. It's unprecedented. We don't know. Fear will drive the market eventually. You've got a massive damaged economy worldwide, not just the US, but worldwide. But if we're only talking about the US, we don't actually know the full implications of what is going to happen because we can't see the recovery. So how is the market up? Fundamentally, you've got to ask this. When you buy stocks, you are buying them because you think that there is value there and they will go up. Now, things like Netflix, I do agree. People are going to be, even if they're sat at home, buying Netflix subscriptions. But eventually, the government is not going to be able to pay out stimulus checks. So Netflix are going to, lose subscriptions on that aspect. So the same with Apple, the same with Facebook. Well, maybe not Facebook, that's quite unique because people are addicted to their phones. And many analysts think that as well. There is very little chance that the world will fully reopen by end of 2020. So we're going to end this year throwing in an election in there with no end in sight to COVID. They're going to have to sort of get the economies back on track. They're going to have to. People are going to suffer from it, but governments need to earn tax. They need to earn revenue. Companies and people need to pay tax. And if they're unemployed, they're not. They're taking out of the golden bucket and not putting a coin back in the golden bucket. And it's a big problem long-term for any economy, not to mention the biggest one in the world. Now, there is a very interesting article I read, and it is the statistical cost of loss of life, which I don't think has been talked about that much. $675 million have gone with COVID deaths. Now, that is a bit weird and saying because typically when someone dies, their net worth, their annual salary, etc., is their statistical net worth. And usually what happens is you have someone replace them in their job, but no one's hiring. No one's taking that director and replacing them with another director. So that's another thing to bear in mind, that is a big figure in itself, and it's only growing. There's new cases every single day. People are still dying from COVID. So no one is paying tax into the system. The system has, believe it or not, only got limited money. What is going to happen? Now, to summarize, I do see two outcomes, and they're both pretty bleak. I see that the stimulus checks may continue. They may continue if there's a second lockdown, and the economy will continue to keep grinding upwards. The Fed will keep it grinding upwards, which will inevitably lead to a bigger crash, especially with people sat on the sidelines. I think that if an influx of gold or an influx of any safe haven asset will prompt a bit of a panic from stocks in general, with the mediocre investors thinking Warren Buffett's just bought a load of gold, then I should do the same and they'll pull their funds too. That's a big worry. That's in very simple terms, but I think that is a bit of a worry. And I think that the longer these stimulus checks go on, although they're needed to, and the money is then going into the economy, the stock market, it's just going to have a bigger rug pull effect on the downside. That's scenario one in my opinion. And scenario number two is that the US reopens, the world reopens, we forget about COVID, we let the people die, and that's also going to be a bad thing because then we have to realize the implications of what's already happened, and a rug pull will happen. People will be burnt, people will have to go back to work, even in these environments. Then there'll be court cases and all sorts of other lovely stuff, which will cause another downturn in the US economy, which will reflect the worldwide economy. To put it in simple terms, I don't think the world is aware, or the average investor, should I say, is aware. The new investor, the new average investor, I'm talking about you millennials if you're watching. Let me know if you're a millennial down in the comments, by the way. It's very interesting to see if anyone's actually taking the time to watch videos like this if you're a millennial or Generation Z or whatever. Also, add your credit card details down. No, don't. I'm joking. I'm completely joking. Don't do that, all right? But coming back to it, I don't think that majority of investors are aware of the implications of what they're doing. They've seen this bottom, and it's the typical, if you were an investor, if you turned 21, 25, something along these lines, during 2008, 2009, you got into the stock market, it's pretty hard to lose money because you're buying at the bottom, selling at the top. And when these stimulus checks were coming out, people were buying pretty much at the bottom. So they've all made money and they all think it's easy and that this magic money tree, they're all perfect traders. Warren Buffett doesn't know what he's talking about. And I think that rude awakening is going to come very, very soon. Where it's going to start, what's the first domino, we can talk about in a future video. If you want to know more on trading in itself, day trading, or you want to join our chat room, there is links for that in the description. Check out these videos right now. And of course, hit me up in the comments with your thoughts. Do you think recession is coming? Or I don't have a clue what I'm talking about. Hit that like button, make sure you subscribe, turn on the bell, and for the love of God, do not buy Tesla stock at its current price. See you in the next one. Bye-bye.